Now, we're just getting some breaking news out of the UK. This is GDP year-on-year 1.4% instead of the 1.5% expected. This is for the fourth quarter, quarter-on-quarter 0.4 instead of the 0.05 that we were expecting. Now, we also have private consumption a touch below government spending quarter-on-quarter. That actually is much stronger than expected. Exports lagging, imports better than expected. So to help us go through the picture overall, let's have a look at pound and what that is doing, 138.84. And then I have a great chart actually that Hillary Clark did for me, which is the DOMAR spread here in the UK. Now let's get back to our guest very quickly for something on the UK. Will and Bob, if you look at the UK, how much do you look at kind of quarter-on-quarter figures to figure out what it means for investments, and how much do you wait to have an idea of what the transition figure brings?
Well, that's a difficult question. Big phenomenon in the UK that I think the BOE has been caught asleep at the switch on is the move in the currency surrounding the referendum, really just as we were leaving the zero bound. And I think they felt that because we were at the zero bound, you could ignore what at one point was a 15% decline in the currency, and we've been not paying the price. We've been adjusting to that move ever since. So you really can't look at quarter-on-quarter data. I think you have to, again, step back and just take a view of what's going on here, which is a pretty major readjustment in the economy. Yeah.
Do you agree? I mean, but first of all, let me go back to my DOMAR spread. I've never showed this before. I'm waiting to dazzle Tom Keene in the next hour. This is basically a fiscal stability indicator because it shows growth in nominal GDP over long-term rates. Bob, are you bullish or not on the UK?
From an interest rate perspective, I'm not. I think that there is scope for the bank to continue to normalize rates and push up towards 1%. And I think the bond market will have to absorb that. I don't know that it goes much further than that. And I agree with William. There's so much uncertainty about the aftermath of Brexit and how that will ripple through the economy. It's difficult to know right now until there are some agreements put in place between the EU and the UK.